I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, October 5th. We've got three markets for you here today. We're going to kick things off looking at corn, then soybeans, and wrap things up with a little bit of livestock, specifically live cattle futures. But like I said, we're going to kick things off with corn. This is the chart that we've got here, and we've recently moved our bias to neutral. We are bearish fundamentally, but the chart has looked technically constructive over the last couple weeks. You can see that we've been making higher lows and higher highs, trending higher, but now we're kind of bumping up against trendline resistance, which goes all the way back to those contract highs made in May. Again, we bumped up against and failed in June, July, August, and here we are again, end of September, beginning of October. This is going to be a bit of an inflection point for the market. It also represents the 50% retracement, or basically the middle of the range from this low back in March all the way to that high, and you've got the 100-day moving average. So there's a lot of technical significance to this 545, 550 level that we've been writing about in our daily reports. If the bulls can chew through that, I think that would probably spark some momentum buying and potentially take us up towards this next level above 560. So despite the weakening fundamental story, the technicals are starting to firm up a little bit, and a breakout above this big resistance pocket would be confirmation of that. A failure probably takes us back towards the low end of the recent range, which comes in a little bit closer towards that 515, 520 area. Now, moving over to the soybean market, soybeans, a little bit different of a story. They've been very bearish. They have not been firming up at all. But in yesterday's interview with RFD TV and in today's Grain Express report that we sent out before the open, we talked about the overall sentiment in this market is as bearish now as it was bullish $1.50 higher. And so when everyone's leaning on one side of the boat, the market tends to go the other direction, not necessarily marking and confirming a long-term low, but at least providing an opportunity to capitalize on a little bit of a relief rally. So we tested and held this support today. That was about 1238. Sure, we closed below it yesterday, but there wasn't a lot of conviction. And so you want to see consecutive closes or a conviction close above or below support and resistance. Today we got the move higher, basically back to this previous point that we have outlined. If we can chew through this 1258, 1265 level, potentially we see additional short covering take us a little bit closer towards that 200-day moving average and trendline resistance, which comes in at 1280. Now, as mentioned with corn, the fundamentals are not necessarily bullish for this market, but the technicals are kind of pointing for a short-term relief rally at the very least. We talked about in the reports also that China is on Golden Week, which is a holiday that lasts majority of the week. So we expect the news cycle and news headlines to be a little bit slow on that front, and that could include flash sales or lack thereof this week from China, but they'll be back next week and potentially be using these lower prices to be buying because they probably need some beans. And moving over and wrapping things up with the live cattle market, had a big surge higher yesterday. We got some follow through in today's session, but weren't really able to get that follow through to last through the close, which is a little bit of a caution flag. We were really looking for a little bit more momentum to carry us towards this 130, 131 area. To kind of reassess things. And again, as with some of the other markets, the fundamentals don't necessarily support the higher prices, but we've been so oversold that relief rallies are what we're seeing in the commodities sector. The breakout above here potentially invite some more longs into the market, and that's one thing we've been talking about in the recent reports, and as well with the RFD TV yesterday, was the fund length. The funds aren't long very many contracts, about 25,000 contracts, give or take, which is fairly neutral to basically flat. They're typically long about 50 to 75,000 contracts. So if we can get a bullish catalyst in this cattle market, that would give the funds reason to start buying the market rather aggressively and get this market moving north again. So those are some of the things we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.